Well, let's talk about the commodity space, and Manisha Gupta joins us with all the update from that particular space. Hi Manisha, good morning.
Morning and thank you. Well, yes, the one factor that seems to be weighing on all commodities is the U.S. dollar index, which is trading at a 6-week highs. And we've actually seen the best week for the dollar index in last 6 months in the previous one. So good gains there. And there is some safe haven buying with the kind of concerns that we are seeing everywhere else. Whether it has been European Union or Bank of England, they have sharply cut their economic growth going forward for their respective countries, and that's weighing on. And that's led to the buying in U.S. dollar. This is exactly the same reason that you have seen a decline in crude oil prices. The base metal prices have been under pressure. Add to that the fact that the U.S. and China third round of talks begins today. And before that, the U.S. administration has said that the U.S. president himself does not intend to meet China before 1st of March. So there are these concerns which are weighing onto the metal prices. Last week was a bad one, and even as Chinese participation may be back, we are looking at some pressure for many of these base metal prices today. A quick word on crude. Apart from this, it also is about the U.S. rig count, which has increased for a second straight week. And then there are some statements from Russia saying that they would want out of the agreement output cut as they want to increase their crude supplies. So that's yet another weakening sentiment for the markets today in Asia.
Okay, all right. Thanks so much for that, Manisha. Well, let's go across to Mangalam. He joins in. He's looking, all fired up this morning. So from the entire Power Breakfast team, congrats to my co-host, Sonal, as well as Mangalam. There's a merger in the works. I have been the sole banker. Wishing you guys, all the happiness and love in the world. Look at that. What a perfect picture. Great, Mangalam. Enough of that. The Bachelor needs to go behind now. All eyes on the derivatives market for now. And then as the day and as the years progress, where's the long-term investment that you've made? Go ahead, Mangalam.
Well, Nigel, you spoke about derivatives markets. I know that this is the future and now there is no option. So thanks a lot for the kind wishes to the entire team as well as you. And you deserve a special mention for being the sole banker, so to say, if you must.
Yeah, I'll take lunch or dinner or...
more than that, perhaps. All right, so let's get back to the markets. Now, on Friday's trading session, wasn't a particularly good day as far as trade is concerned. We saw a sharp correction on not just the Nifty, even the mid-caps underperformed. But the data came by in terms of cash market flows. And guess what? The FIIs bought in cash markets around 844 odd crores. The domestic institutional investors, they were the ones who were selling. Almost about 1,000 crores pulled out by the markets by the domestic institutional investors on Friday itself. By doing so, what has happened is the FIIs who bought close to around $500 million this month so far, and the domestic institutional investors, they turned negative to the tune of around 17, 18 odd crores. In index futures, though, there was some selling by the FIIs, close to 224 odd crores. But remember, the FIIs from 41% net long have now moved to 53% net long. So it'll be very interesting to see where this goes, especially given the fact that the purchase in index options was massive on Friday's trading session, close to around 1,900 crores bought, and most of that was attributed towards building long index calls. 21,000 long calls added. This compares to just about 7,000 long puts added. So upside likely to be played via the options side. However, watch out for the 11,000 mark. A lot of call writing seen there. The Nifty put-call ratio from elevated levels of close to around 1.8 has now corrected to about 1.6. Let's see how that goes as well.